Oh boy, here we go again. Back to work. It's Monday evening already, 13th day of June. We're getting ready for Tuesday's trading session. We get some news tomorrow morning, getting some big moves on the charts today. Got a lot of great trades setting up for Tuesday's trading session. I'm going to cover all my favorite trades in tonight's video. That way you have a game plan to make some money on Tuesday. As always, before we jump in and get this party going, got a lot we're going to cover in tonight's video. You better make sure you subscribe to our YouTube channel. Make sure you subscribe. I don't want you to miss tomorrow night's video, all the good stuff we publish every evening on this video. And as always, if you enjoyed the video tonight, if you tune in every evening, I appreciate you guys supporting the YouTube channel. Hit that like button for me. Appreciate you guys tuning in here tonight. But enough of the intro, right? Tuesday is not going to trade itself. Where's the low-hanging fruit? Where's the money going to be made on Tuesday? Let's break this thing down here. Boy, everything, well, not everything. Oil is bullish here right now, but bearish on the Nasdaq, bearish on the S&P. You'll notice we get a bunch going on here on the Emini Nasdaq and the Emini S&P. We've had 3 big days moving lower here. Last 3 days have all been very bearish. You know that everybody is waiting to sell those bounces, trying to short into those retracements right now. We definitely have open space to the downside here on the E-mini and the NASDAQ, so I'm not afraid of trading breakouts. And I definitely do have some reversals on my radar for tomorrow. I know it's tough to think about a reversal right now, but we'll talk about the situation. We'll need to see tomorrow a very specific situation for a potential reversal. So NASDAQ, S&P, we're bearish, and we're looking to sell those bounces, and we'll talk about some different areas to sell those, or the best areas to sell and the setups to sell into here tonight. Over on the oil is obviously very bullish right now. Something kind of surprised oil here this afternoon, sends market racing higher. We have a lot we're going to cover here on oil. I can see breakouts going higher, that being a possibility. We'll talk about some breakout patterns tonight, and obviously whenever we see a range below us and a strong pop-up, you know me, I love me some double top reversals back down into that trading range. Get the long side and the short side setting up on our radar for tomorrow. Again, we're going to make sure you know all the best entries, all the best setups, that way you're ready to make some money tomorrow on Tuesday. Now, speaking of Tuesday, there is some news tomorrow. It's not the biggest news of the week because unless you've been living under a rock, I think pretty much everybody knows the biggest news of this week is the FOMC announcement on Wednesday. Going into this morning, I think everybody kind of still assumed they were going to be raising rates by a 0.5 percentage point. But after this bloodbath we saw again today, I think now you're starting to see a lot of analysts start to think we might get a surprise, 3/4, right? 75 basis points here of a rate hike coming on Wednesday. The big news is definitely on Wednesday this week. We got some small stuff here tomorrow. That PPI number, I'll tell you, if you take away the FOMC announcement on Wednesday, that PPI number really is a big report. We saw CPI on Friday last week, right? That big record-breaking CPI report. I guess it wasn't transitory after all, was it, Mr. Fed? But we know that this PPI report, this is the producer price index, a little bit further away from consumers, so it's not exactly as it's not as big of a reaction, but this will definitely be something to be watching for here tomorrow. I would imagine traders will be watching that tomorrow. If we see another record-breaking PPI, remember CPI was last week, that's consumer prices. This is PPI, the producer prices, right? Not usually as volatile as the CPI report we saw last week. But you got to think, though, if this is another big number tomorrow, you got to think that really contributes to the likelihood of that 75 basis point hike instead of that 0.5% hike everyone was expecting only 24 hours ago. So I hope we'll get a nice little catalyst out of that tomorrow, 8:30 Eastern time. We open up our trade room at 8 o'clock Eastern time, so we'll have a front row seat for that PPI number tomorrow morning. I wouldn't hold your breath, though. I don't think that it really probably won't have much of an impact on us for tomorrow. But I do want you to be aware of it, just because, again, it is something that does deal with inflation, and we do, of course, everyone's obsessed right now, for good reason, with inflation. So keep your eyes on the 8:30 news for tomorrow. Big news is on Wednesday, and we get some more stuff coming later on this week. We got rollover on oil coming later on this week. We'll talk more about that here as we go deeper into this third week of the month of June. Now, back to our charts here right now. Now, guys, I'm going to cover all of my favorite trades on each of these charts here tonight, whether you trade one of these markets or you trade all of these markets that we do in our trade room. I'm going to give you different trade ideas, different learning opportunities throughout the entire video here right now. And remember, I like to kind of save the best, more advanced setups all the way to the end of these videos. So I'll give you a reason to stick around all the way to the end. We'll go Nasdaq, S&P, and then crude oil. Why don't we jump into the Nasdaq here first? The NQ, and of course, boy, oh boy, a third day of another big bloodbath moves. Not as dramatic as it was last week, but you can definitely tell people are anticipating the Fed to whack these marks a little bit on Wednesday. What are the most important kind of keys to success here for tomorrow? Well, I think the most important thing right now is we had a very strong move down, earlier today, and we just pulled back and retested that low. This is a really important clue, because anytime we see a strong move in one direction, anytime we see a strong move in one direction, we expect a retest of that low. Strong move in one direction, we expect a retest of that low. At this point right now, this is where we basically say, okay, mission accomplished. The sellers have retested their recent, big move down. Now at this point, we're kind of wondering, do we bounce and go higher? Do we go sideways into a range? Or do we continue going lower down to that next area, 91.5, 11,000, as we make our way back towards those kind of pre-COVID highs down around 10,000 even. So the recent retest is a big deal. It basically tells me that there really isn't any unfinished business right now. If we had seen this market pull back and we're sitting up here, I would say, okay, there's a wide open loop down here. They're going to want to retest that low. But now they've retested that low, now we have to wait for more information. Next big clue is a spike in channel. Spike in channels are really, really important clues. This is definitely something you want to learn, especially if you're a new trader. Anytime we see a spike followed by a flat, it's almost like the opposite of a flag, right? A bear flag would be a spike down and a move higher, right? That's kind of what a bear flag looks like. It's kind of the opposite of a flag, right? It's a strong move down, and then it kind of grinds down. That's a spike in channel. Now, why do we care about that? Well, because the base of that spike in channel, ultimately where the spike runs into the channel, which in this case is right around that, 11,604, 11,605 area. That is historically where everybody wants to sell. And I'll tell you right now, we've had, we'll talk about it in a minute here. We've had 3 days lower, right? 3 consecutive days, Thursday, Friday, and then now this Monday. You got to think we could really use a nice deep pullback right now. I'm sure I'm not alone. I'm sure a lot of people are waiting for a nice deep pullback. We talked about big pullbacks last Friday morning or last Thursday night on our last video of the week last week. So bottom line is the spike in channel definitely tells us we can sell off the high of that channel, but the real best entries in a spike in channel are usually going to come up around kind of that battle zone, that sell zone, which again is the base of that channel. And then how about a range? Third clue on this is a trading range. This is way too easy to ignore. This is way too obvious to ignore. As you can see, the market made a strong move down into a range, another breakout into a new trading range right here. Market was kind of bleeding lower there, popped down into a range. Ranges are magnets. Ranges create these balanced markets. And so what happens oftentimes is the amount we go above a range will end up being the amount we go below below the range. That's why I said this is just too perfect not to include this on the chart. Now, why is that important to us right now? Well, first of all, we can again assume the sellers have quote unquote achieved or accomplished their objective, right? They went up above the range, went down below the range, job done, right? They got what they wanted. Now we have to wait for a pullback or a breakout going lower. Another really part of this, an important part of this in my eyes, is that now if I want to sell the high of that channel, is that a real safe place to sell now? Might not be the best place to look to sell, right? If I use that same idea, I can now look and say, okay, we've gone this far below the range, this far will be above the range. And now all of a sudden we start to see, well, there's that spike and channel battle zone again up there. This time, of course, in that 583 area. I do still have the opportunity to sell off the high of that channel, but this trading range really makes it important that we be a little more careful. I'll talk more about that here in a moment. And then I think one thing that's kind of an obvious kind of giveaway right now is we're 3 days lower here. Not just 3 legs lower, we're 3 days lower here. Again, you can go all the way back to last Thursday, that big sell-off last Thursday, into Friday's CPI bloodbath, and of course the continued carnage that we saw today. Why do I bring that up? Well, because whenever we see a really big move in one direction, we know a trading range is probably coming soon. And so you do want to kind of keep an eye out for a trading range down here. Don't be surprised if we start seeing this thing start to form into a big range down here. It's very, very common that anytime we see a really big move in one day or one period of days, oftentimes the buyers are not going to want to buy down here. It's just too bearish. The sellers in the market may think, hey, we've gone 3 days so far. Why would I get out right now? And the market may simply start to trade sideways. That's kind of the psychology behind why big moves in one direction oftentimes mean ranges, because nobody dares to buy it. The sellers who are already in it, they keep on selling every pop, and so it just kind of grinds out and ends up going sideways. So do keep a trading range on your radar for tomorrow, and it won't affect our game plan too much, but it's definitely something that you want to kind of keep an eye on for this. So when you put all these clues together, and I know that was kind of a long-winded introduction here right now, when you put all these clues together, now you can kind of see where sellers would love to sell off the top of this channel. They would love to sell up inside that battle zone. Buyers, tough to be a buyer right now, but I think if we can go up and retest that low, I think there's a definite chance of a reversal off of that low. I do like that idea for the reversal. We'll see if we can get that tomorrow. We'll talk more, obviously, about this here as we go deeper here today. The bears, of course, right? The bears, of course, if we do go lower, we do have space to go down to that 11,191. And then from there, it's kind of an easy shot down to 11,000. And we start running into some bigger numbers down there, or lower numbers at 657. Ultimately, it looks like these bears may be trying to take out that 10,000 number eventually, if you're looking for kind of a long-term objective. That puts us back to those pre-COVID highs back in early February of 2020. It seems like a lifetime ago. The world certainly has changed between now and then. So how do we sell it? Well, let's talk about this. As we pull back right now, the 2-try rule is your best friend. And there's going to be 2 basic kind of setups that you want to look for. For example, as I go higher here, if we didn't have this trading range, I'd be a lot more aggressive on this short. I just would. But because of that trading range, I have to kind of anticipate the potential for that larger swing in the other direction. So knowing that, this is where the 2-try rule is your best friend. Watch this little sequence, because this is going to be where the money is on these pullbacks that we see here coming tomorrow. As we go higher, I'm anticipating now that buyers may try to finish off that deep pullback, right? We may have bears step aside and wait for it. So what I'm going to do is I'm going to try to get some of the weekend, some of the buyers coming in and buying on that pullback. Again, think about the 2-try rule, and you'll learn more about the 2-try rule in our video classes here at School of Trade, but you want to see them try twice on that pullback. Once they try twice, now think about where all their stops are. right? Think about where the buyers get forced to sell out of their positions, and that's where the entry is going to go. That'll be a 2-try failure. Now, at this point, where does the market want to go? So we grab that 2-try failure now going lower. Where does the market want to go? The market now wants to take out that low again. So now at this point now, what I'll do is I'll go in and find a new channel, draw the channel off those lows, bring it up around that high, and then repeat after me. Look left, find those swings, and get that first test trap. The first test trap, it's a money trade. It's a money trade, right? So again, we go up top of the channel. Again, take out this range. I'm a whole lot more aggressive on this short. When you put the range in context with the fact that we recently hit that low, we really need something more reliable there. Buyers try twice, and we can sell into those stops. Then as the market rolls over, now we draw that new channel, and we go looking for that trap setup. Now traps, guys, I got like 100 emails this weekend, people who are talking about traps they've been taking, making money off these setups like the 2-try failure and the traps. Now I know most of you guys have taken the free trading course on the website. You learned all the setups. You're using them to make money on your own account right now. But listen, if you're here for the first time today, if you haven't grabbed that free course, I'll put a link up here for you in the upper right-hand corner. Grab that link. Register on the website, take the free classes, right? Those will teach you the entire roadmap. If you're like me and you hate missing the best trades each day, or you're taking too many losses, or maybe you're working a full-time job, dreaming about trading full-time and trying to make that transition to full-time trading, the roadmap that I teach in that free trading course will give you the knowledge now. So next time, for example, if we get that deeper pullback now, okay, now imagine now we have that deeper pullback now. The deeper pullback is the same exact thing, right? Same exact thing. Now we make that run higher. Now we want to think about, okay, now we're up at major resistance. Remember, we've had 3 big days down here. So try not to confuse this with a reversal, right? Because again, you got to remember, we haven't seen very many deep pullbacks here. Now again, when it pulls back this far, right, that's a hell of a move. That's a lot of momentum for the buyers. And that's exactly why you want to let them try once, let them try twice. Maybe I can get a little trap up above that high, right? Look for that short from there. But the key is 1, 2, okay? That's the key. Think about where their stops are. Where is their pain? Right? And look for that short back down again. Once we see that nice juicy signal below the moving average, we know where stops are, and look for that short back down. And remember, this is where the fun begins, right? This is where the party actually begins, because now we know they want to go. They want to go back down to retest the low. So we don't chase it going lower, right? We don't chase it, because if you're selling short up here, you're taking profit down here. We don't want to chase it. Want to find that new channel, draw off the lows. I call it drawing the channel backwards. Find that channel, find those prior swings, and hit right and hit that first test, right? Because the first test is always the best test. So think about that now as we go higher. Keep those 2-try failures, right, into that new hidden channel and that dump going back down. Again, it could happen here, right? It could happen here. I'm just waiting to see right now what we get. If we do end up going sideways right now, okay, if we do end up going sideways, nothing changes. Okay, nothing changes. We're still trying to go up and sell above, still trying to go up and sell above. Just be aware of that. The one thing that you kind of want to keep in mind, though, if we do end up going sideways here, is you want to remember that you want to remember these pendulum swings. So for example, if we go sideways here and then we go lower and then coming back up again, that pendulum is going to be really, really important, right? To figure, okay, that's the level of resistance, and then we can get our sell on with 1, 2, and back, right? Make sense? So that's kind of the only challenging part if it does go sideways here in that trading range, is to think about what that breakout may do if it snaps back up again, and we can use that same 2-try failure into that first channel test we mentioned here before. What if we go lower here? What if we go lower? If we go lower, and we'll talk more on the S&P here in a second, but if we go lower here, I'm going to keep on adjusting this channel down. right? So if we keep on going lower, you keep on ratcheting down that channel, keep waiting for that deep pullback, keep selling into stops, keep on selling the rips, as we say, right? Buy the dips in a bull market, we short the bounces, we short the rips in a bear market. And I'm sure there's something I missed here tonight. I'll make sure we fill in some of the gaps here tomorrow on the in the trade room. Let's grab the S&P. Let's grab the S&P. S&P, of course, is very, very similar on this. So obviously, I'll try not to repeat myself too badly here. We'll talk about some reversals here now on the S&P 500. Really, very similar, right? We had a very strong move down. They've recently retested that low. Now the question is, do we bounce and sell back down again? Do we go sideways into a range, or do we continue going lower with a breakout to the downside? We got plenty of space here, plenty of space waiting below us here on the S&P. I'll tell you right now, the S&P has a much more open space below us than the Nasdaq does. The Nasdaq, when COVID kind of the unlocking began, the tech stocks sold off pretty good originally after COVID kind of came to an end. And I know it's still affecting us right now, but once the kind of unofficial end of COVID happened a few months ago, the tech stocks sold off pretty hard. The S&P and the Dow, for example, haven't quite caught up yet. If you go to a weekly chart, look for the 200 moving average, you can easily see here. We have plenty of space to keep going lower on the markets like the S&P and the Dow. Right now though, again, mission accomplished, right? We've retested that low. Now we wait for more information. Again, there was a spike in channel here. That spike in channel is the same exact thing. It gives us a very specific area of where I want to look for a short. Again, I can sell the top of this channel. I can sell the battle zone above it. Those are the two key areas because of that spike in channel. The range above us is one of the biggest kind of variables on this. And you can really see that trading range is really kind of putting a cramp in my style here right now for that short off of that low. But the most important thing is, again, look at the Nasdaq. I can take the amount below. I can project that going higher. And it's going to put us all in that same general location. So keep that on your radar for tomorrow if we do get something of a really deep pullback here. And again, let's not forget, 3 days lower. This is the third day in a row we've been kind of selling off here. You want to be anticipating, again, deep pullbacks and trading ranges right now as this market kind of settles into, kind of this post, 4,000 area, post 3,900 or 3,800 area here on the S&P. Not a lot changes here in the fact that as we go higher, 1, 2, back down, find that new channel. We go higher, 1, 2, back down, find that new channel. These are very straightforward here, very much the same here as we saw on the Nasdaq. One thing I wanted to cover here that we didn't cover here on the Nasdaq is how do we trade the reversal, right? How exactly do we look at trading this reversal here? Again, one way to do it would be, well, I think the only safe way right now to trade the reversal is if we go up and end up all the way back down to take out these lows. So imagine now we get that pop up, we get the buyers trapped, right? And we sell back down again. We retest that low, right? We don't keep going through it. We retest that low. Once we retest that low, get rid of some of these levels here so we can kind of keep things simple here for us. Once we get that retest of that low, now we anticipate the sellers who sold up above these highs, they're taking their profit. And we also know now the weak hands will come in and try to get short down here. It's very important that you remember the smart money in the markets. They sell when they can risk small to earn large. Okay, smart money in the market, smart traders overall, they always filter their trades where they can risk small to earn large. That's why I like to wait for deep pullbacks in a big, strong bear market. It gives me a chance to take a small amount of risk for a nice, big, juicy reward. If I'm trying to sell, think about this now, if I'm trying to sell down here, can I get a good risk-reward ratio? Can I risk small to earn large? No. Well, I could as long as the market keeps on going, but I don't know that yet. I have no crystal ball. I mean, maybe you do, but mine doesn't work very well. I can't tell if this pullback will hold, right? There's nothing really, all kidding aside, there's no indicator, there's no special magic to know whether or not that pullback will break and go lower. And since And since we've already accomplished the mission now, right? Since we've already gone up and back down, trying to sell down here, these are the weak hands, right? This is the sucker that just sat down at the poker table with a pocket full of chips and man, I want to learn to play, right? That's the person who's selling down at that low. So we go up, we retest that low. Mission accomplished. Now it's that same. This is why I said you want to really get to utilize the 2-try rule right now. It's that same basic idea of those bears trying once, bears trying twice. Now remember, there's a lot of different variations of this, and we'll go over more of this tomorrow in the trade room. You'll learn. You'll see. Boy, I probably have 50, maybe 100 different examples, right, of this setup and part of that free trading course I mentioned before. But the bottom line is bears try once, bears try twice. Again, remember at this point now, mission accomplished. Okay, the bears, the smart money is already in. They're already out now. This is the weak hands now selling. Let them try twice, again, because it is a bear market and we do need some sort of catalyst. Right? We can't just buy off support because we're at support. We need something to give it a nudge, right? We need a catalyst. And to get that catalyst, we need to run some stops, right? If you get stopped out of a short position, you buy your way out. There's no way out of a short position other than buying your way. So what happens is those are basically just simply buy orders, right? It's important to think about stops, as in this case, being buy orders. Right, so once those stops get triggered, this will oftentimes slingshot and just snap right back higher. Now, normally what I would do is say, okay, we're gonna grab that trend line, grab that trap, right, and look for that reversal, and then from there again grab that new channel. And look to buy the first test of that channel. I don't like the first test of this one though. You can probably see why. Right, you can hopefully probably see why, right? It's a very bear market right now. And so as we go higher here, trying to buy that first test is not going to be as reliable, right? I would much rather wait. I like the idea of that double bottom 2-try reversal. I like that part of it. Let's put it this way. This move higher right here will need to be a very, very strong move higher, right? It'll really have to rip. If it really rips and runs higher, then remember, anytime we see a strong move in one direction, we're probably going to get a retest of that high. So if it really rips and runs higher, I'll probably consider a first test off of that low. It could be a trap, it could be a failure, it could be a pullback combo, right? I know I'm talking the basics here right now, but you'll learn about traps and failures and pullback combinations. You'll learn about that stuff inside that course link in the upper right-hand corner. So think about it that way, right? It really needs to be a very strong pop, right? And then we can look to scalp off of that, right, off the low of that channel, right? It's just very important that bounce is really, really strong to get enough buyers to want to buy that pullback. If it's not strong, what will happen is we'll come back, the buyers will once, the buyers will twice, and we'll probably end up right back down to that low again. So just keep it in mind, right? You can be really careful buying as it goes higher. Okay, one thing you want to think about, and we talked about this last week, is that as it goes higher right now, right when you start thinking, oh, geez, maybe that's a reversal. Right when that crosses your mind, bam, that's when you start looking for the failure. Okay, it's very simple like that. Marks have a funny way of kind of convincing us, oh, shoot, well, the news media says this. Well, that guy I follow on Twitter just said that. Maybe he didn't. No. Back off the ledge here, right? Once it starts getting up, right, that's when we start roping in those buyers who are listening to talking heads on Twitter, and we start selling into those stops back down again. Right when this thing starts to feel like a reversal, that's usually when, again, big bear move down like this, it's usually when it's time to be a seller. Now, if we can go back up into these highs, if we can hold a pullback, and we can blast, right? If we can really jump off that moving average up there, then we're in for reversal, right? Then we can start to look at this as a possible big bull reversal. But remember, it's very common to get really deep pullbacks. They look very attractive. They can't hold the pullback, and they dump right back down in. So really got to be careful as the market goes higher here, not just on the S&P, the Nasdaq as well. Really need to be careful. Right when it feels like that reversal, it's probably when it's time to start thinking about trapping in those buyers with your 2-try failures and grabbing that channel that dumps back down. And again, like I mentioned before, if we do end up going lower here, what I'll do is I'll start to extend down these channels, and we'll start looking for the shorts off the high of that channel. Same basic idea. Get above the moving average, right? So as we go, if we do go lower here, right? If we end up bleeding lower here right now, what I'll probably do first is look for a channel there, right? Up around here. Okay, that'll be the first thing we'll do here in the trade room tomorrow morning. If we start barreling lower here, I'll go, okay, let's grab a new channel there off that high, start looking left, find those prior swings, get up above those prior swings. That'll put us above the moving average, rope in those buyers with a failure, grab that pullback, right? Makes sense. And again, you're going to learn these in that free class mentioned earlier. So if we do keep on rolling lower, I'm going to keep on finding those hidden channels drawn off the lows, right? Up around those big highs, wait to get up. And again, we're not trying to pick the top. We're going to wait for those buyers to come in and foolishly buy that pullback so we can sell into those stops, grab that pullback. First pullback is always the one you want. And again, we'll keep going. Again, we get more levels here waiting down there, that 36.60 and a quarter there on the S&P. All right, looking good there on the E-mini. How about some oil? What's going on in oil? Oil, of course, is quite different here than the S&P and the Nasdaq here tonight. And by the way, if you're still watching this video right now, congratulations, great job. You are the person I actually make these videos for. Most people are just dabbling in the markets. If you're watching this video all the way through, let's put it this way, I would do whatever you can to get into my trade room and come learn and trade along, because if you are this disciplined to watch this video, if you're this dedicated to watch this far into this video here right now, you'll do very well with us as a student, right? It's the people who don't want to put the effort in. Those are the ones that, they're not going to succeed in anything, right? So I get a lot of feedback, make your videos shorter, things like that. I'm going, listen, if you want to be a trader, you better get used to the idea of staring at a screen more than 5 or 6 minutes at a time. Anyways, I diverge. Back on track here. So kudos for watching all the way to the end here. 3 big keys here. What's the first key? First key is big, strong move. Why is it important? Because anytime we see a strong move in one direction, we expect to see a retest of that level. Anytime we see a strong move in one direction, we anticipate a retest of that level. We have to respect the direction of those strong moves. What's the next big clue? Next big clue is a range below us. Okay, range below us. Now, why is a range below us a big clue? Because ranges are magnets. At this point now, if that big strong move, if they can't break this thing going higher, if they can't rip this thing through 123, 124, you know what's going to probably happen, right? It'll go up and come back down into that trading range. Okay, which, by the way, do you see that 2-try right now? See him trying once, see him trying twice. I'll talk more about that here in a moment, right? Don't you worry. That's a very, very good clue for us here tomorrow. And by the way, it's not just this range. Okay, no. That is also, look, there's also a bigger range back here. So in all reality, this whole area right around 119, 118 half, this whole area is a big juicy magnet. Look what's happened. Every time it goes up, back into that range. Goes down, back into that range. We're buying low, we're selling high, using that range as a magnet. Third big clue is all the resistance overhead, not just this top. But remember, we just saw, as you saw there overlooking left, right? There's a big run higher there, that area right now is a huge area of resistance. Now, why is it important? Well, of course, it's important because as this market tries to retest that high, if they can't get something going up there, we would love to get that short back down into that trading range, right? So definitely some food for thought there as we go. The market's bullish, right? The market's bullish, but a breakout right now really has to kind of do it. It has to really show up right now, or else this range below us is probably going to gobble this thing up and bring us right back down to that 118, 118.50, 119 area. So how do we trade this stuff right now? Well, my favorite trade for tomorrow, if I could, if the trading gods, shine down on us tomorrow in our trade room, my favorite trade tomorrow will be the double top reversal. It would be to go back and retest that high. Right? What do we always say? Mission accomplished. And then what? Oh, baby, this is where the fun starts, right? Now get the weak hands going 1, going 2, right? Get those buyers trapped in. Use their stops as a catalyst, as fuel, if I can kind of tie it into oil chart here tonight, right? Look for that failure going back down. Then again, as I've said repeatedly here tonight, to try failure off that high, find that new hidden channel. And what do we always say? First test is the best test. I just want to sell off the top of that channel, right? And as you'll learn in the free trading course I mentioned earlier, this could be a trap, it could be a failure setup, it could be a pullback setup, right? And you know where the market wants to go at that point. It wants to go back down into that trading range. And I also think this area too is right for that. So if they, let's say they do get through this, they take out that big high up there, not a lot changes. Not a lot changes. Same thing here. 1, 2, back down, find that channel, hit that channel as we go lower, right? I like that. I like that sequence. Now, as we go higher, how do we buy it? I mean, let's face it, right? If they retest that high, mission accomplished. They pull back to the moving average, okay? And they what? And they blast, right? And they blast. Now, of course, this is a breakout pattern. We call these 1, 2, 3 breakouts because there's, surprise, 3 legs to them. There's one leg that takes out that high. Second leg pulls back to the moving average. And third leg blasts. That's the key. It has nothing to do with how strong that first leg is. No, I shouldn't say nothing. Obviously, if that first leg is pretty strong, the odds are much better. But I'll tell you right now, with the range below us, there's no way to tell if that strong retest of that high will be able to hold that pullback. You'll probably never see me buy that first pullback, right? What I will do though is go out, and once they do blast through that high, now what I'll do is find that new channel, mark off that high, mark off that low. I'll drill down to my entry time. This is a 1500 tick chart, right? We're not going to trade off that time frame tomorrow, the trade room. We'll drill down to our faster time frames. We'll find those prior swings, and we'll look for, because after all, anytime you see a strong move in one direction, we expect at the very least a retest of that low. And so I look for that test of that low, get below a prior swing for a trap, get below the moving average for a failure. Again, failures are really, really common right at the low of those channels. Get below the moving average, trapping those bears. You'll see examples of that inside that free trading course. And then think about that breakout now. Is it possible? We retest that high and then 1, 2, yeah, hell yeah. That will be a fantastic trade. So a big, strong bull breakout going higher. We gobble up that first pullback, anticipating a retest of that high. And then buyers, the weak hands, are getting in right up into those highs. Buyers once, buyers twice, and then look out below. I like that setup a lot. That may not happen, right? May not happen here, especially as we open up here in Asia and you see the bears coming in right away. Now, what if we go lower here? Well, first of all, I mentioned earlier, you can see here, we've got the buyers already trying once, already trying twice. What I'll do in these scenarios is I'll draw a trend line off those lows, bring it up around that high, and use that for the short. You'll see here real quickly when I take this other channel away here, You can see we're running right into it right now. Now it's overnight. So it's, if this trade was to set up tomorrow at 10:15, 10:30, this would be an easy decision to make. It's overnight right now. So because it's so slow and, overnight is just not the most consistent thing in the world, what I would love to look for now is we have the buyers now trapped in. So now think of a smaller variation of this setup, okay? Here's a couple things you want to think about. So as we pull back here, right, think about buyers once, buyers twice, and that trap, okay? The trap is what you want to think of now going lower. Remember, you've got to respect that big move. That big move it's in my eyes, you don't want to trade against that. You don't want to get too aggressive until they retest that high. Once they retest the high, then you can start really hitting it hard and it stops. As we try to pull back here though, 1, 2, that trap will be your safest short here on the way lower. What I would really look for is a pop and grind. Okay, we haven't talked about these yet. I'll give you guys, again, more reasons. Stick around all the way to the end. A pop and grind. Let's say we get a nice big move down and we start to kind of grind down. It would make sense because all the buyers who get in over here, they're now seeing the writing on the wall. Once we break below that low, the buyers start to liquidate and the market will oftentimes grind as we go lower. You want to learn these grinders because what you can do is draw a trend line off that low, bring it up around those hidden channel highs. And I said earlier, right, that first test, that trap, is always the money maker. I like to get the best ones, just so you know. We'll talk more about this tomorrow in the trade room. The best ones, remember, are usually right above the top of that channel, right? That'll put us above the moving average. The buyers will come in. They'll try to push it, go in higher, because it's what buyers do in oil. They buy blindly. Once those buyers commit, now we know where their pain is. We can use those stop losses as fuel for a failure, and we can grab that pullback combo as we go back lower. Where's the market want to go? It wants to take out that low, right? It wants to bury that low where that whole big move came as we're going. So watch out for that pop and grind. Watch for traps as we go back down again. If we also get a strong run lower, something like that, don't be afraid to connect those lows up around that high. Same basic idea, right? Same basic idea. Up off that channel, failure off the moving average, and back down we go, right? Very, very simple idea here. Again, I would like to, if they're listening out there, trading gods, I would like to go up and take these highs out overnight. By the time we come into our desks, right, look at that short off of that high, we'll see what we get, right? We'll see what we get. As you can see, there's also potential for a range here, right? What does that range do? Not a lot. It still tells us 1, 2 back into that range. Just think about, though, if we go lower and then back up, right? Think about where that pendulum is, and that will kind of give you an idea of kind of where some additional levels of resistance are up overhead. Does that make sense? Right? Well, again, we'll cover more of these kind of missing pieces tomorrow in our trade room, but this gives you a really good game plan for tomorrow. Some of my favorite trades for tomorrow's trading session. And then speaking of tomorrow's trading session, if you're looking for a great place to learn and trade along, if you're taking too many losses or you're missing the best moves each day or you're making too many mental mistakes, you're going to love our trade room. We open up every morning, 8 o'clock Eastern time. We prep the charts. I provide all the cheat sheets, all the worksheets, all the trading tools. I would love to have you there trading right along with us. Get a great group. If you put a little bit of effort with me, you're going to love your results. Get a great group in the trade room right now. What I'll do is I'll put all the membership links, all the free course links. I'll put those right below me tonight on the website or in the description of the YouTube video. And speaking of the YouTube video, hopefully by now I've earned a subscribe. So make sure you subscribe, set your notifications so you don't miss tomorrow night's video upload. And if you guys have any questions at all, you can always drop questions, of course, in the comment section. You can call the office with that toll-free phone number. We have live chat in the lower right-hand corner. So if you have questions, it's very easy to get those questions answered. It does take me some time sometimes to get to the comments. I get a lot of comments every day, so I may not get to the comments as quickly as I want, so don't be afraid to shoot me an email, jump on Skype, use live chat. There'll be a much easier, faster way to get the help that you need along the way. All right, guys, get some rest tonight. Get some rest tonight. Gonna be a busy, busy rest of the week, third week of the month of June. We'll talk more about what that means to us as we go later on in this video newsletter week, and Have a great rest of your evening out there. We'll see you guys tomorrow morning, 8 o'clock Eastern time in our trade room. My name is Joseph. Thanks for tuning in. Be well out there. Be nice to each other, will you? And you better be here next time. Adios, amigos. Bye-bye for now.